Happy Friday. Hopefully everyone is doing great and awesome and motivated for some stock video montage today. Sorry that I did not post a video yesterday. What the? Is this thing not recording? Okay, maybe it is. Well, I'm not going to redo that intro. Anyways, welcome here if you are new. I cover pretty much a lot of things in the market. Primarily very much fintech bull, tech bull, software bull, which a lot of people are not very happy with software related stocks. I'm going to be talking about that. And overall, I'm just an American bull. Love the stock market. Yesterday, I tend to post videos on this channel Monday through Saturday, but yesterday I was overly busy with work, and also I did get a haircut as well too. So just a very busy day yesterday. I will probably be posting a bonus video this weekend, probably Saturday and also Sunday as well too, to pretty much make up for no video yesterday. But otherwise, yeah, a lot of stuff has happened in this market. I want to cover a lot of stuff probably in under 17 minutes. I really do respect you guys' time. Like I said, this is a new YouTube channel, and if you've been following me for the last couple months, you've been getting pretty much all my trades and buys, investments on here. I did buy a lot of stock over the last couple days. Redid a little bit in my public profile, which I'm going to be showing momentarily. And next week, I'm probably going to be depositing more money and also buying more stock as well, too. So, going to be talking about that near the end of today's video. But, like I said, if you're new, think about subscribing, because I make videos tend to Monday through Saturday. I have other YouTube channels which are much larger than this one. My main YouTube channel is 200,000 plus subscribers. I have not advertised this channel just yet. It's kind of really funny because a lot of my gaming viewers, they have found this channel. So if you are one of those that have found this channel, drop me a comment below. But it will be advertised in the future. Might be soon, might be down the road a little bit. But we're going to be getting a lot of new viewers over here relatively soon. Okay, so straight off the bat, SPY is nearly, or I should say SPY is less than 5% from all-time highs. That's pretty crazy, right? I mean, we are in a solid, like, V-shaped recovery now, give or take, and the SPY is less than 5% away, less than 3% away from all-time highs. But then we also have very big stocks. They're very much lagging or also bleeding. Primarily Microsoft that I'm looking at. Tesla has also been beaten down, and many others. We look at the Qs, all-time highs. I actually did not map this one out here, but the Qs, NASDAQ top 100, following suit very much the same companies as also the S&P 500. But I mean, you have less than 5% from all-time highs. The IWM is very much different. It's the Russell, the small caps, but the small caps basically rallied very hard when the big dogs were very much going down in November and December. So even the Russell is a couple percents away from all-time highs. Crazy, right? You got the NASDAQ. I mean, look at the friggin' NASDAQ. Like, the NASDAQ from all-time highs, you're talking below 5% too. Obviously, the NASDAQ is looking very much like a recovery. Much better than the SPY and the Qs. You got the Dow Jones, pretty much same thing. From all-time highs here, obviously a little bit over 5%, but hey, it's a lot better than being down over 10%. Bitcoin still very much beaten down, but we are above 70K, which is a very, very important level. And then we also have the VIX, which is crashing down here to pretty much Chinatown. Okay, the VIX has utterly just been on a uptrend, and now it is very much crashing down. Oil is still very high, but obviously not as high as what it was a few days ago, near like 120s. Crazy, but still, oil is still very, very, very high, okay? This has to drastically get much lower for people to really stop worrying about fears. Now, something I really want to show that I've been tracking on this channel is a really good survey, and understand that these are just primarily surveys. I've never been friggin' surveyed. I can go ahead and bet that a lot of you all have never been surveyed too. Um, the AI investment survey I like actually a lot more than the Fear and Greed Index by CNN, which if you're in the market, you probably know what I'm talking about. But I've been referring to this a lot. And last year during Liberation Day, I went all in. I bought over $100,000 worth of hard cash. In the last 6 months now, I have bought over $60,000 worth of stock. I've just been buying this entire downward cycle. And as a disciplined investor, as a disciplined trader, that's what you're supposed to do. People are running away from all these big, great companies out here. And I could be wrong. Maybe Wall Street is right. And maybe, software stocks are really going to be going away and we're going to have Skynet take over, right? Hey, it's not the first time that I've been wrong, but I've made a lot of money in this market by buying the fear when everyone is out at the beach on the golf course. Nobody wants to be in front of their smart device looking at a bloody market. That's when you buy, okay? When everyone is looking at the market because it's going to all-time highs, that's when you go to the beach and you sell some stock. That's when you go to the golf course and you sell some stock, okay? When you want to get to the party early, okay? It's pretty funny. I don't drink alcohol anymore, but I would purposely show up to parties early because I have alcoholic tendencies, which is the reason I don't drink anymore. And I would purposely pregame. I would pregame before going out to dinner. You know, a simple Monday night dinner. I would pregame before getting into my Uber. I would pregame before going to a friend's house and partying. I'd pregame, right? Yes, like I said, alcoholic tendencies. You want to show up to the party early. And there's one stock that I got. And, oh man, it's so good. AMD, spoiler alert. You want to show up to the party early. And then when the party's cranking and everyone is having a great time, and it's like 9 p.m., and you know the party is probably going to be dying off maybe around the 11th or 12th hour, even though the bar is going to stay open maybe until 1 or 2 a.m. You got to take chips off the table, okay? And that is 101 investing. That is 101 trading. That when everyone is being greedy and FOMOing on in, hey, hey, the party's gonna crash hard. Okay, AI investment. Obviously, we're pulling back on the bearish sentiment. That is bullish. Obviously, since bullish is indicating, but for us to be at 52, 48, 51, and now 43, these last 3 weeks clearly indicated that a bottom was very much near. And I've been saying this on these videos. I'm like, hey, I got to start ramping up buying. And over the last month and a half now, I've been depositing a lot of money and buying a lot of stock because I see more people becoming fearful, and that's when you got to pull the trigger. Red means go, green means sell. I know that's a backwards mentality, but when it comes to the stock market, you got to look at stocks very much overvalued. You got to look at the overall market. You got to be looking at every single thing as a whole. And when the party is cranking, hey, for me personally, that's when I build cash. And then when the party, it like nobody wants to, party, that's when I'm depleting my cash and I'm deploying my cash into stocks. Now we did get a lot of data here, government data. And yesterday we did get, PCE, which, did come in line. That is in inflation. However, personal spending, that is down a little bit. Personal income, that is in the negative. That's not necessarily good. But PCE is right in line. GDP came in below. That's actually bearish because GDP should not be coming in below. It should be a little more. And as for today, we basically see CPI. CPI year over year is pretty much spot on. Okay. Core CPI, this is where a lot of people don't believe the data. People don't believe this data is because they're like, well, how is oil skyrocketing and this stuff is going down? We got to also wait for a revision that could very well happen, and it's irritating a lot of people where the current administration will revise these numbers. That's why a lot of people are saying, well, the Trump administration could be cooking the books. Do you believe that or do you not? Do you believe that we're in a like okay economy or a K-shape economy? K-shape economy is when the big wealth earners are going up, but people in like the middle class, me personally, I'm upper middle class, so people like in my area would be going down. It's anyone like below that is a K-shaped economy. And a lot of people are saying we're in a K-shaped economy. Do I think that's a good thing? No. I honestly really don't like it how there are a tremendous amount of people out there struggling. That's utterly BS, right? Tremendously. You got the big dogs getting wealthier and wealthier, and once again you got like middle class and below getting smaller and smaller. It's not a good thing. I love my country. I'm a patriot. I'm also a veteran, and I don't want to see really anyone suffer in my country at all. And if you're from a different country, I've been all over the world, the Middle East, all over Europe. Was stationed in Europe, and you got to be a patriot to whatever country you're from. And you probably don't want people in your country to suffer, right? So there's a lot of hostility out here around, is this data accurate? Because it's all about who you ask. If you ask someone that makes 50, 75, 100K a year, or maybe 150 or maybe 200K a year, they could very well be struggling. But if you ask someone that's making like 2, 5, 10 million a year, they could be going up, 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 up. It's all about who you ask. And that's how you know that there is somewhat a problem in our economy. But what does it mean for the stock market? Here's a messed up thing. The stock market, the economy could be going down. The stock market could be going up. Crazy, right? It's it's crazy. So what is the stock market doing right now? Well, the major indexes are very much on the rise. What is going on with software? Software is bleeding like a juicy piece of ribeye that I'm going to be eating for dinner. Very much a carnivore style human being. It's bleeding. Meta. I actually did sell a Meta share here today of my Meta position, and I did reallocate those funds. I'll get to that momentarily. Robinhood very much following Bitcoin, but AMD is on a friggin' tear. Why? Because people know what is coming for AMD. And what is coming for AMD? I have AMD shares below $100, not on my public account, on my private, because I bought all those shares during Liberation Day. I've known about AMD for close to about 2 years now. They're going to be taking a lot of market share from Nvidia. Oh, yes, they are. And people know that AMD is going to be unveiling some great things for the second half of this year, and the party has not even started. This stock is on a tear, and we could see this stock honestly end. Could AMD do a double up in a very risk-on bullish market? Oh, yeah. We're going to see AMD rock and roll. Okay? I always get this when I talk about AMD. I'm not saying AMD is going to overthrow Nvidia, although that would be friggin' epic, and that would make me life-changing money. But all we need AMD to do is execute, and they can become a $1 trillion company, and on my positions, I make over 2, 3, even close to 400%. Okay, very important. Adobe is just bleeding. It is what it is. Software stocks. Palantir is fitting this bubble. Palantir is getting phenomenal news. Palantir has a lot of negative sentiment from The Big Short. What's his name? Oh boy. I can't remember his name, but he's once again going after Palantir. Palantir is executing phenomenally. Oracle, I just started buying. They have a big bet against their company. It's software stocks in general. CRM is another one falling off a cliff here. I actually gotta add another one. Another good stock is Service. Oh boy, ServiceNow. ServiceNow, very much, wow, I haven't looked at ServiceNow actually in a while. ServiceNow is, to be honest, I may actually have to open a position in either Salesforce or ServiceNow. Like, it is scared poopless of this company. I use Adobe products every single day. It's utterly like crazy. Okay, so this video is obviously a little longer than 17 minutes or about to be. If you are new here, welcome. Like I said, I am doing a public account challenge on this YouTube channel for motivation purposes and education purposes. Pretty much to motivate people that you can take X amount of dollars and grow it with very much smart investing, smart short-term trading. Doing a public account challenge, taking a couple 5 figs to 6 figs in the course of 17 months. I got some rules set for me. This account challenge started January deuces of this year. I've already preloaded a lot of revenue into this account, and I'm probably going to be preloading more revenue next week just because it is a generational buying opportunity in my opinion. These stocks are phenomenal, and they are literally going for such a low PE. It's not even funny. I deposit $500 per month, but like I said, I'm preloading my monthly deposits. And if the market does sell off, I'll go ahead and do a large deposit like I did back in February. But the account challenge is going to go down to 16 months instead of 17. Pretty simple terms. So, like I said, basically looking to take this sum of money here, which a couple months ago, it was actually over $45,000. And my positions are, or this account is very much risk on, fun little challenge. A couple months ago, SoFi was actually up over friggin' 120%. Why didn't you sell out? Well, I'm not God and I can't predict the future, but my cost basis on SoFi a couple months ago was $4,900. I've increased my cost basis. Woohoo! I'm a SoFi raging bull. On my private account, I own 1,642 shares of SoFi. $7.41 of a average. I was buying SoFi February of 2024 when nobody wanted it. And I got done filling my position during the summertime in 2024, and it was 1,500 shares that I had built for a position size, and I just kept adding bonus shares. So this account, and yes, on my private account, I do own very, very much the same, like, stock. Obviously, if I'm buying stock on one profile, I got to be buying stock in another, but SoFi is a massive position for me. I'm good on my private. I just got bonus shares here, which is phenomenal. All in all, I'm holding over like 2,200 shares of SoFi. Very bullish on SoFi. AMD, for the next 3 to 5 years, this stock is going to be rock and rolling. And like I said, AMD could do tremendous things here. Adobe, do you believe they're going to be going away? I don't. I use Adobe products every day. Robinhood is very much a gambling company, so they're going to follow in suit with Bitcoin. Palantir, there's a lot of drama, but Palantir is a risk-on company. When the market goes risk-on, Palantir's probably going to be over $200. I've been in and out of Palantir since it was in the teens. I've made great money, but not life-changing money because I've traded Palantir, but there's better opportunities right now than Palantir. I'm not saying Palantir is not a great company. It's a phenomenal company, and it's also not going friggin' bankrupt, okay? When the market's going to be risk-on, Palantir is going to be closer to 200. I'm pretty much going to be doing the same thing as I'm doing with Meta. PayPal is just really pretty much a hold for me. Oracle, I'm building a position. So I ended up selling some Meta shares over the last couple months now. And I ended up selling a Meta share here today. My Meta position was actually down close to 10% over the last couple weeks. Pretty funny. Hold on, water cheers. Why did I sell a Meta share and reallocate some funds? I ended up buying, I bought Oracle a couple days ago. Same thing with a couple SoFi shares. Sold Meta, I bought an Adobe share today, Oracle, Palantir, and then a handful more of SoFi. Why did I sell another Meta share? I've been selling a couple Meta shares over the last, month and a half now. And my Meta position, cost basis was actually close to about $5,000. The company has changed course. And as a disciplined investor and trader, if anything right now, I'm just primarily just trading like Meta. I'm not like invested anymore because their CEO has changed a course. I was not expecting Meta to be coming out and saying, hey, we're going to be spending over $100 billion on CapEx. It's a very bold thing to do. Now, do you believe that it's going to produce revenue over the next year or maybe 3 to 5 years? That's really what the management team believes. Or do you believe it's going to be a burden? Amazon spending $180 billion. Actually, no, Amazon spending $200 billion. And then Google is spending $180 billion. I was not factoring that in to a lot of, growth rates, my price projections. And I really factored in on a bull case of Meta closing at $1,000 at the end of this year. Obviously, I made that price projection very much earlier this year, before their CapEx came out, before SaaS apocalypse, before the Middle East. That was a very bold statement. And then a very base case, what I kind of really thought was going to happen was maybe $800 a share. And then a bear case is basically pretty much like maybe $650. It's very hard to see Meta maybe at like $800 at the end of the year. So I see a lot more upside with my capital in very much Adobe, in very much Palantir. Even if I start scaling out on my Palantir position here, maybe when it gets back to $200, which it will once the market goes back on risk on. And I see a tremendous amount more upside in one Oracle. I do believe the management team, because they've addressed their issue. Okay, Meta's management team has not addressed their issue. They've addressed the issue, but they've ignored correcting it. They addressed the issue saying, okay, we're going to pull back a little bit, but then they just came out with saying, hey, we're going to be spending $100 billion plus. That's not corrective action. Oracle has stated, hey, we're not going to be taking on any more debt. There's a lot of issues with Oracle, but it is a debt issue, and it's also pretty much a backlog issue. But Oracle has stated, hey, we're not going to be taking on any more debt. We're going to be filling our orders, and we're going to be growing insanely back. Do you believe the management team? I do. That's the bet with Oracle. Meta is a little different. So, I see more upside, honestly, with SoFi. So, if Meta continues to go up, which I think it will, I'm probably going to maybe take another share off the table when my position gets really above 10%, maybe 12%. If you are a Meta bull, no disrespect to you, I see different things, and obviously my strategy is a little different, but I see a lot more upside for SoFi, definitely Oracle, and also definitely Adobe. But we'll see. Maybe in the next upcoming months, I may have to open a position in friggin' Salesforce and also ServiceNow because, man, software is just getting destroyed. Retail that are buying the SaaS apocalypse, and there are a lot of retail people out here, we could be wrong, and maybe Wall Street is right, or maybe we are, maybe we're a little bit right and a little bit of wrong. Maybe Wall Street is a little bit of right, a little bit of wrong. Maybe Adobe doesn't go back to all-time highs. Maybe they go back into the low 400s. Okay, hey, I'll adjust my plan from there. But to go ahead and say that all the software is going to be gone, no, it's not the case. Stay healthy, everyone. Stay motivated. Remember why you got into your stock positions. I'll see you all for a brand new video tomorrow. Take it easy. If you enjoyed today's episode, like it and subscribe for more. Later.